Secretary Lou, it is an honor. Thank you for spending some time with me here at the World Economic Forum.
Great to be with you.
Let's begin with the obvious. Quantitative easing in Europe. We got the announcement from Mario Draghi, the ECB president, yesterday. Is it enough to get the global economy back on track?
You know, look, we've seen in the United States that if you take decisive action using all the levers that you have, you can turn around a bad economic situation. You know, in the United States, we used monetary policy, fiscal policy. We reformed our financial system in a dramatic way. And here we are, 6 years later, and things are looking much better. Conversations I've had this morning, people are almost ebullient about the conditions in the United States. We see the need for much more work to make sure there's shared benefit. Europe has been slower to pull all the levers into play. What we have been saying consistently is that Europe needs to use all the levers as well. They need to use fiscal policy, they need to use monetary policy, and they need to do structural reforms. So I think that in any country, over-reliance on one tool puts more burden on it than it should have, but all the levers have to be used.
Does the U.S. economy lift up the world, or does it get dragged down by it?
You know, right now, I think everyone around the world is looking at the U.S. as an engine to pull the world along. I think we have a very strong economy that's going to remain strong. I think that while we have exposures to the world, it's not a question of turning the direction. I jealously protect every tenth of a point of GDP growth, but it's a question of plus or minus a few tenths of a point, not a question of the basic direction of the U.S. economy. I think for the global economy, there really has to be some more policy made, because there are things that you can do in Europe, in parts of Asia, where you could move the economies faster. But it takes policy. And I think that the challenge, if the world looks to the United States to make up for subpar performance everywhere else, then the numbers don't work. The world economy is too big for the U.S. to pull it all. I think the U.S. will be a force for good in the global economy. We're happy that it's good for the U.S., it's good for the global economy, but it's not a reason for others to sit back and say they don't need to do all the things that they can to get their economies moving again.
As strong as the U.S. economy may be, it does face some challenges. On the currency front, for example, the euro traded through $1.12 this morning. 2 days ago it was at $1.17. Is the dollar getting too strong?
You know, I'm going to repeat what I and all my predecessors have always said, which is that a strong dollar is good for America. Right now we have a strong U.S. economy. We have an economy that is on a relative basis stronger than a lot of other economies in the world. I think the challenge is to bring the other parts of the global economy into a better performing position. Let me distinguish.
Weak currencies help them do that.
We have made clear, we in the United States use fiscal policy and monetary policy as well as reforms. What we have made clear is that there's a difference between using domestic tools for domestic purposes and intervening in ways that are designed to gain unfair advantage. We, the G7, G20, OECD have understandings about that. We have been very clear on a bilateral basis and on a multilateral basis that if countries do things that are unfair, we're going to press hard and press
fair
for change.
Is all in the eye of the observer, though. You have the ECB cutting interest rates. You have the, doing quantitative easing. You have the Bank of Japan doing quantitative easing. You have the Bank of Canada cutting interest rates. Nobody expected it. It feels like a currency war. Does it not feel like that to you?
I think the distinction between domestic tools for domestic purposes and interventions that are deliberately designed to gain unfair advantage are different, and we just have to constantly push on the distinction between the two. We've been clear that the U.S. will not sit back if countries step in and do things that are designed to gain that kind of unfair advantage. We've done it, as I say, both in the multilateral meetings we go to, but more importantly, when we go bilaterally with countries. And you've seen important progress in that area. I think that the agreement that was reached at the G7 just 2 years ago is one that major economies have been sticking to. And if they deviate from that, it becomes a problem.
Mr. Secretary, what does the administration know about the new king of Saudi Arabia, and do you have any reason to expect him to change its oil policy?
Look, the President and the Vice President have, on behalf of the American people, extended their condolences to the people of Saudi Arabia. Many of us have met with the new king as Crown Prince.
Have you?
I have, yes, on a couple of occasions. And, I think that there will be time in the future to discuss what the policy implications are, if any. I think that...
Well, you have to be thinking about them. It's because of the Saudis that, largely, that oil is at less than $50.
You know, the global oil markets are complicated. Saudi Arabia certainly plays a role in it. I just don't think today is the day to be speculating.
Let me ask it of you this way, then. Are you happy enough with current policy, the policy not to cut production and to allow the markets to decide the price of oil?
You know, I was involved in the energy debates in the 1970s, and if anyone had asked me in 1979, would I be happy or unhappy if there were lower energy prices and market-determined energy prices, there wouldn't have been a hard question to answer. We're in a slightly more complicated position right now because the U.S. is the biggest producer right now. Net, for the U.S. economy, lower energy prices are a plus. It's like a tax cut. It puts hundreds of dollars in the pockets of working families. So our economy will do better, not worse, with lower oil prices.
Even with the jobs that are being lost in the oil services companies, even with the decline in investment by the oil producers?
Just think of the massive number of people who are going to have more disposable income. There will be pockets where it's disruptive. So, and I think it's a good thing that we're developing our resources, but I don't think we're going to stop developing our resources. We don't expect to see a decline in production in the United States.
You don't?
No.
Why not?
Because the wells that are drilled, that are functioning, are still, we haven't seen any decline.
Well, some people would say that's because production is funded up to a certain point. Once those companies, once those independents, for example, have to go back to the bond market with oil at $45, maybe that doesn't work anymore.
But that will take a while to see. If the
months, a year?
Well, I've looked at analyses that show that production is still, slightly increasing. So it hasn't even leveled off yet. I'm not going to predict far into the future. I think that the reality is we've shown that you can develop U.S. energy resources in an economical way and in a way that's environmentally sound. The question of whether a shale well is drilled this month or next month, this year or next year, they're going to be developed.
The oil is still in the ground.
The oil is still in the ground. And if you look at across our economy, there's no doubt that it's going to net increase growth to have lower energy prices. So I think that we're in a much stronger position as an energy producer. We have the capacity to take care of so much more of our own energy needs, and I think our economy is going to do better. And if prices go up, we can deal with a slightly higher price or a slightly lower price. We're in a much more stable, strong position than we were in even 2 years ago, much less 20 or 30 years ago.
Mr. Secretary, question for you on taxes before we run out of time. The President took a pretty hard-line position, some would say, on taxes in the State of the Union address. What does that reflect? Does that reflect a confidence that there's a deal that can be reached in the fairly short run, or is it just to make a point?
Look, I think that in the State of the Union, the President expressed both an optimistic and a confident vision of where we are and where we need to go as a country. It was a speech about how do we help the middle class to get the kinds of opportunities that every working family in America deserves. In the tax area, I think the proposals he put forward would help our economy, and they would help to promote the kinds of growth and opportunity that the speech was all about. I think there are areas where we can make real progress. You have to start somewhere. You can't start on everything. Clearly, in the areas of trade and business tax reform, there is a basis to work with the Congress on a bipartisan basis to get something done. And I believe once we start getting things done, there are other areas where we can proceed and get more things done.
How long until you sit down in a room with Orrin Hatch and Paul Ryan?
We've been having conversations, in various ways for some time with both the Democratic members and the Republican members. I think there's broad interest in doing something here. It's just the second or third week of the new Congress, so it's a little early to be talking about schedules. But I think that if you look at the things that we're saying and the things that leaders in Congress are saying, there's reason to think that this is time well spent.
Our time has run out. Thank you very much. Treasury Secretary Jack Lew here with me at the World Economic Forum.